Welcome to the Sand to Pearls Stock Market Commentary for market week ending Friday, April 25th, 2014. Market breadth. With this past week's market decline, our bull-bear point and figure ratio rose from 1.01 to 1.11, advancing slightly further into bullish territory. The total count of securities in bullish or bearish patterns declined 2% to 2,038. The count of bearish stocks decreased 7%, while the count of stocks in bullish patterns increased 3%. The Sand to Pearls PNF market breadth summary chart shows us a market now 2 consecutive weeks in bullish territory. Paid subscribers have access to the Open Office Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking on Membership, and clicking Sign Up. For those who are interested, a free 2-week trial subscription is available. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, rose 34 points for the 16th decline in 36 weeks. At a negative 237.45 points, it continues below all 8 tops above plus 100 and below the July 2012 low, but continues above the remaining 6 bottoms, including a new one, below minus 100 in the last 35 months. Market gauge volume analysis. In this week's volume analysis, the Russell 2000 ended in distribution mode. In the last 2 weeks, it had 2 accumulation days and 1 distribution day. Of the other indexes, both the Diamonds Trust and the S&P 500 deposit receipts ended in accumulation mode. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Russell 2000 ended in neither accumulation nor distribution mode. Momentum. This week, the CCI 20 daily continued upward, then back down on Wednesday with a lesser angle out than in, making the zero line reject invalid, but back up Thursday, then down Friday, 425, for a valid zero line reject short entry within the plus or minus 50 range, now is just outside the plus or minus 50 range. We will follow the results of this trade simulation in next week's commentary. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 61 weeks ago, while the daily CCI 20 began a Woody's downtrend 4 weeks ago. With 3 weeks below zero, the CCI 20 weekly at minus 53.57 has risen and is now just outside the plus or minus 50 range for a valid zero line reject entry signal. Industry rotation the last 2 weeks. All of the top 5 industries are positive, and only one of the bottom 5 are negative. Bullish, brokers have entered the top 5. Gold and silver has entered the bottom 5. Bearish, disk drives and banks continue in the bottom 5. Oil and oil services continue in the top 5. REITs has left the top 5. S&P Retail has entered the bottom 5. Focus this week: Are You an Elitist? Class Warfare and the New Nobility by Charles Hugh Smith. When those who pay most of the taxes bear the brunt of resentment for being part of the elite and are therefore planning to abandon ship, what is in store for the rest? We are experiencing a victory of victimhood that accelerates the decline of an already fast declining society. Meanwhile, the media generates false targets to protect the new nobility that sits above those who pay most of the taxes. Because the super wealthy are in the top 5% and top 1%, the average incomes of these groups are heavily skewed by the enormous incomes of the top 1%. As a result, it would be more accurate to remove the top 0.1% from the top 10%, top 5%, and top 1%, but I haven't found any statistical charts that reflect this. The article itself is very worthwhile reading, even if you think you already know this. I began capturing bullet points from it, but quickly had too many. Thank you for tuning in for this week's Sand to Pirls Stock Market Commentary. Hoping that you've had a marvelous weekend, that you have a great week coming up, and wishing you true success.